Hey, welcome to DAO Talk. We have Will from Syndicate. Thanks for coming on the show.
Thanks so much. It's great to be here.
So give us a little bit of background, who you are, what you're doing in the space, what your background is in the space.
Absolutely. So I'm Will. I'm a co-founder of Syndicate. We help people set up investment DAOs, and we've set up right now over 3,300 investment clubs on our platform. I got into crypto in 2013. I actually started out in the decentralization space working on mesh networking software. So like peer-to-peer communication between mobile phones was what I was researching. In the process, discovered Bitcoin, and then was doing a few hackathon projects related to Bitcoin, like you could verify file hashes on the Bitcoin network. Another thing I was working on just on the side was to see if I could launch my own coin. Back at the time, you had to fork the Bitcoin network, essentially recompile the source code, modify any parameters that you wanted to change. Then when you brought up the network, you had to find your own proof of work miners to secure it. So it was like a horribly difficult process. And halfway through doing that, I discovered Ethereum. The Ethereum presale was going on at the time. And I was like, wow, you can launch your own coin without needing to secure your own proof of work network. That's cool. So then I took the $10 sign-up bonus I had gotten for free from Coinbase. I didn't have much money to invest in at the time, but I put that into the Ethereum presale and have been tracking the Ethereum ecosystem ever since.
That's awesome. That's an awesome story. Yeah, we've come a long way from like starting your own token from then, right?
Yeah, I mean, 2014, of course, it was just a white paper and the network wasn't live. 2015, it existed, but developing on it was pretty difficult. There was like 150 of us in a Skype group chat of just Ethereum development, but it was super hard to use at that time. They had like 4 different languages or so that they were working on. Solidity hadn't even taken shape yet. 2016, there was the DAO. I put some ETH into that back in the day, and that was the very first investment DAO.
Yeah.
It didn't go too well. It got hacked and collapsed. And then my co-founder Ian and I, we started brainstorming Syndicate in 2018 when we were at IDEO. He was setting up their crypto venture fund. I was working on R&D there, and we realized investment DAOs are something that should come to life, but it was too early. Like there was barely any DeFi in existence. It was CryptoKitties and enterprise blockchain.
Yeah.
That was mostly it in 2018. But then 2020 during DeFi summer, there was finally enough capital on the network to make this happen. So then we decided to launch Syndicate in January 2021.
So it's been in the works for a while. Like it's been something you've been thinking about for a while.
Yes. Like a lot of what we've done is the culmination of 4 years of research. And we have a long list of things ahead that we want to do. And we've just been heads down on bringing it to life.
So give a little broad overview of like what an investment DAO is, what's the purpose of it, and what makes you excited about investment DAOs?
Yeah, absolutely. So there's 2 types of DAOs, investment DAOs and community DAOs. Investment DAOs offer underlying ownership of the assets. They also offer, for example, distributions or dividends if there are profits. And with investment DAOs, you're putting money in because you expect it to be profitable. You have an expectation of profit. With community DAOs, they're typically structured as donations. You don't have ownership of the underlying assets. You're donating and you have a say in how your donations are spent. We focus on investment DAOs at Syndicate, and investment DAOs, I think, are a really exciting category because it has the fewest coordination problems of any DAO infrastructure. So essentially, you know your goals. Your primary goal is usually to make money, and your secondary goal is to make a positive impact. Your goals are very clear. The steps you can take to do so of allocating capital or advice is very clear. And investment DAOs tend to be much more clear-cut than community DAOs. Community DAOs, it's a lot more ambiguous, a lot harder for them to take shape. So we've helped some community DAOs at Syndicate and helped them a lot with structuring, but our main focus is investment DAOs and getting those off the ground.
So going off of investment DAOs, what was the impetus behind Syndicate? Like, what was the original idea? What got you guys excited about it?
Yeah, so the funny part is in 2018, we were actually brainstorming essentially like decentralized track records and reputation systems. So we were like, on-chain is really unique because on-chain is verifiable. You can have actions speak louder than words, and it's possible to prove track records. And that was something that was really exciting to us. But the thing that we kept circling around was like, what's the use case for this kind of system? Like decentralized reputation and track records. In the abstract, they're nice, but when are you going to adopt them? When are you going to use them? And in 2018, like it was like mostly like CryptoKitties and some GameFi experiments, and it didn't really make sense in that context. But as we saw the capital in the network increase over the years, and as we saw DeFi emerge as a category, it became clear to us that, yes, the track record and reputation is investing. It's clear, it's verifiable, it's on chain. And the track record you build up matters a lot for future investments. So it lined up really, really nicely with our focus. And also, like, Ian had been running a IDO's crypto venture fund. I had been involved in investing in more of the decentralized side of things with like Ethereum and the DAO in 2016. So we both saw that this would be a huge category. And like he had a really keen understanding of the barriers to entry on the centralized side of venture funds. And I had more of an experience on the like pure like decentralized
Yeah.
projects on the
Yeah.
other end of the spectrum. So combining that into
Good team.
Syndicate worked really well.
Yeah. So 2020 is when you said like it kind of officially started to take form.
That's when we started prototyping it. Yeah. So we started prototyping the smart contracts in the summer of 2020, around DeFi summer. And then we actually designed the original prototypes. Ian was the one who mainly pushed that forward around essentially like automated asset management. And it was like very heavily inspired by DeFi summer. And then we started having conversations with users, and they're all like, NFTs are just starting to be big at the beginning of 2021. And they're all like, can I buy NFTs with this? And we're like, no. Everyone keeps asking about NFTs, and we realize like future asset types will be very necessary, and we don't
Yeah.
know what those future asset types look like yet. Like if you're running a fund on a 5-year long timescale, being locked into investing only ERC20s doesn't make sense. So we actually then reimagined the whole architecture and had it be like a bring your own wallet setup.
Mhm.
You can hook in a Gnosis safe to Syndicate. You can hook in a hardware wallet. You can hook in hypothetically on-chain governance. No one's done that yet, but nothing's stopping you from doing so. And use that on top of Syndicate's platform, because that allows us to be compatible with any asset that could possibly be created and any perks around those assets. Like if you're doing a lot of NFT investing and you want to, for example, like access token gated communities, depending on the wallet type you use, you can do that. And things like that are really exciting. So it was really interesting how the user feedback shaped it and
So
helped us.
as user feedback continued to play a major role in the direction of Syndicate?
Absolutely, yeah. At IDO, there's a really strong user research culture. Most of their core of what they do is user research. So when we started Syndicate, we had tons of conversations with people of like screens of post-it notes, and
Yeah.
we were like, which
Yeah.
which use cases would you want to use on our platform? And we'd collect that. And we also talk with customers constantly, community members, users. Like we have a Discord with 7,000 plus people in it, and they're giving us feedback constantly.
It's awesome.
We have calls with groups on our platform constantly. Just right before this was meeting up with a Symmetrical, a DAO on our platform that's
Mhm.
Gen Z investors, and
Yeah.
we were chatting about what they wanted to see next. So it's something that's really exciting because we've done 4 years of research on this. We know what we want to do next. We know the kinds of things we want to bring into the world. But what we don't know is which pieces resonate most with people and how we should present them to them and how we should design them. So it's this really nice combination where like we have a really strong North Star. We know what we're going for, but also people's feedback shapes the
Yeah.
execution of it constantly.
Like you have a high level vision of where you want to go. You just don't know exactly how it's going to play out.
Right.
Yeah.
Like we know what our roadmap looks like. We know what it looks like for the next like 2 years.
Yeah.
And nothing in the market will change that. It's been the stuff that we've been
Yeah.
thinking about for years that we're bringing to life finally.
Do you think like that 4 years of kind of just like research and sitting back waiting has like started to pay dividends now?
I think so, because like we were able to see a lot of trends before they happened. So for example, we started Syndicate in January 2021. The DAO boom was like that summer of 2021. We had already been working on it for 6 months. And that let us define things like, for example, like investment clubs as a structure where a lot of people, that was completely new to them. And we were able to help define that category, which existed in the Web2 world in small ways, but wasn't really talked about in the Web3 world. For example, like a lot of the like decentralized social work, like we've been thinking about that for 4 years, but seeing all these trends before they happen is something that's very important to us. I mean, when I invest in the DAO in pre-crash ETH terms, like would have been worth 55 billion if it were not hacked. And it was so obvious to us that investment DAOs were a huge category, but they barely existed. I mean, OpenLaw was doing great work in pioneering it, and they pioneered a lot of it in 2017. And there's a few OpenLaw DAOs that are doing excellent work, but there were maybe half a dozen to a dozen investment DAOs in existence. I know as soon as I say that number, I'm going to get a bunch of Twitter mentions being like, that there's actually way more. Fair enough. I'd love to have links to like all the 2017 and 2020 era of investment DAOs, but at least like the ones that are still operating today that we know of, there's like half a dozen to a dozen. And that category didn't take off for many years, but since 2016, it was so clear to me that it would take off And it was just a question of when the timing was right. And DeFi Summer was that key unlock.
Yeah. What is the big draw to investment DAO? Like you said, you always knew like, hey, this is going to be a big market for this. Like, what do you think it is?
So we had two different perspectives. So Ian was running the crypto venture fund at IDEO and saw how many barriers to entry there were, how high a bar there were for requirements for setting up a fund, how much admin overhead there was, how much of it was just very, very manual and very ops heavy and just done by hand. And me, on the other hand, like I had the experience of like I didn't have much money to invest when I invested in the Ethereum presale, nor did I have connections to the presale or the team. Likewise, with the DAO in 2016, it was also something where like I didn't know the team personally, but it was accessible to me because it was on this decentralized network and it was something that was pioneering a new model. So he saw a lot of the downsides of the centralized side. I saw a lot of upsides of the decentralized side, and we are like, this is so obvious that this should exist. I think probably our solution for syndicates is somewhere in the middle of those two. Like we like help people with legal and regulatory compliance. We don't ignore it. At the same time, the legal and regulatory compliance that we guide people through, we've found structures that work really well that are a lot more lightweight than like a full venture fund, for example.
Is regulation like the biggest challenge for Syndicate? Like what is the biggest challenge right now?
Yeah. I mean, the biggest challenge for us is probably like the spread of crypto nativeness. So like if you use Syndicate with ETH or USDC, you have a phenomenal experience. Like you automate deposits, you automate member management, you automate distributions. Like if you use us with ETH and USDC and any ERC20 of your choice, it takes it from managing this thing being a part-time job to managing this thing being mostly fully automated. But you need to be comfortable with your wallet. You need to be comfortable interacting with smart contracts. You need to be comfortable handling your own crypto and self-custodying. And that's a big barrier. So like we tell groups all the time, if you want to set up on our platform and 90% of the people investing into your investment club are comfortable with crypto, you'll have a fantastic experience. Like it'll be 10x easier than anything else you could possibly use. But if you have a lot of people who need to do wire transfers and aren't comfortable handling crypto and don't have a wallet, it's like 0.5x worse. Like you're going to have a harder time.
Yeah.
And the easier it is for people to interact directly with smart contracts and the more crypto native people are, the easier it will be for us to onboard people. But right now, like fiat on-ramps and off-ramps are still a challenge. Like having people have their own wallets is still a challenge for mass market adoption. So a lot of that, of like more usable wallets and more usable off-ramps and on-ramps they're things moving in that direction, but it's still pretty early.
Is that something like you guys are putting a lot of energy into? Is it more like, hey, like we're just going to wait for it almost to, be adopted?
Right now, it's a wait for it kind of setup where like we're evaluating tons of partnerships constantly to address these things and make it easier. And, we look at groups that could help with this all the time. It's a really big task. Like if a few years from now, no one builds it, would we build it if we had to? Yes. Would we prefer not to build it? Yeah.
Yeah, it can direct your energy to much more, positive things. Yeah.
Mm-hmm.
Okay. Interesting. I want to ask, like, what gets you fired up every day?
Yeah. The exciting part, it's like every single day, I just learn a new way a DAO is structured. So like we have DAOs, for example, that are running everything from like really complicated snapshot strategies across multiple DAOs with different voting weights that are like super, super complex, all the way to like people managing their DAO via Telegram group chat. We have groups coming to us because they want to invest in NFTs, tokens, real estate. It's just pretty remarkable the kinds of things that we come across. I think that like that's the fun part. Everyone in the DAO space is trying to figure it out. Like the norm right now is you have all your assets in one treasury and everyone votes on every decision, and that's fine, that works. Like it's a structure that builds a lot of consensus, but there's so many other structures to experiment with, and seeing that kind of experimentation in real time is really exciting.
Yeah, that's something we've been talking about a lot because we've had so many interviews and we're talking to so many people. Like we talk to all these different people from all these different projects, and there's almost like no overlap, right? Like everything is just like their own individual, industry, and they're all functioning as a DAO, but they're all functioning differently. And we were talking to Aaron from Govern earlier, and he's just like, it's scary to like think there's so much unknown, but it's also like what makes it so exciting.
Yeah,
like every day you're learning something new. Like you've been in it obviously longer than most, right? But even like for DAOs, they're relatively new, right? If you think of like a DAO expert, like it's 3 or 4 years old, right? Relative to other industries, it's not that old at all, right?
Yeah.
Transferring into this crypto in general, like what's your favorite part about being in the space? Is just that variety? Is there more to it? Like is it the tech? Is it the decentralization? I know you come from that background, but like What is your favorite part? And it can just be like the memes. If it like, it doesn't have to be something like super
I
intellectual.
I think it's composability, actually.
Okay.
So, a lot of people in crypto who are builders, they immediately see, like, in the Web 2 world, let's say, for example, you wanted to develop an application that was, you know, let's say you wanted to develop a lending protocol. You'd have to integrate with all different banks' APIs. You'd have to integrate with some sort of data source. You'd have to integrate with different regulatory options. You'd have to like figure out how to like securely store all the PII, authenticate people, like handle their funds securely, everything like that. And it would be like a massive, massive overhead to set up, say, a lending protocol, like whatever, a firm, for example, in the Web 2 world. And that's because not only do you need to get this all set up, but also every single API you rely on will change, will break. So you'll need to maintain it constantly. And there's no immutability. Everything will just change underneath you. We've even developed things against the Web 2 APIs where we'll come back to it 2 weeks later and they've changed it completely and we need to rewrite it. Whereas in Web 3, you have immutable smart contracts that are composable. So that means that we can develop something, integrate with another protocol, and know that it will never change. And the ability to launch things and not need to do any maintenance afterwards is like mind-boggling in software development. We've never had that in
Yeah.
history. And there's all this blockchain criticism of like, oh, like crypto doesn't have any use cases, it's all speculation. And I'm sitting here thinking like, we have a platform that guarantees that code will run forever as specified and it will never change or never break. That's like mind-boggling in terms of what you can do with it. So I think a lot of the benefits of crypto come from composability, and that's where we think of Syndicate as a highly composable architecture. So not only do we structure it as composable under the hood inside of our protocol via a modular architecture,
Yeah.
but also we intentionally integrate with the rest of the ecosystem. Like we say, bring your own wallet, whatever fits your needs best, whether that's a hardware wallet or Gnosis or on-chain governance even. We say, bring your own governance tooling, Snapshot, on-chain, etc. Bring your own decision-making tooling. Bring your own like community tooling for token gating. And we can compose across the rest of the ecosystem, which means that not only can we provide benefits to every other tool by helping onboard massive numbers of new people that end up becoming their users, but also every new tool that gets built is automatically
Yeah.
compatible with us. And that's just like
So
incredible.
that idea, like, you bring up people always like, there's no use cases, right? And I guess because people can't see them yet, right? But like, how is that something like we can communicate? Is it just by building awesome products, or is like how do you communicate that idea of composability to someone that really doesn't understand it? Doesn't that seem like one of the bigger issues of like mainstream adoption almost, or like is it not even worth arguing with those people? Is it kind of like, yeah, just build the shit, like.
So I think that people can understand it. Like at one point, I was getting dinner with representatives in Congress,
Mhm.
and they wanted to learn about crypto from experts in crypto. So I was at that dinner and helped educate them about how crypto worked. And the conversation started with money laundering,
Of course.
gambling, drugs, and environmental damage.
Mhm.
That's where the conversation started. That's what their perception was. By the end of that dinner, we kind of like we walked through crypto from first principles. We started with like, what do things look like in the Web 2 world? Why is centralization bad? Why is decentralization and composability good? And like built that up from first principles where they saw like, wow, if your district represents a lot of farmers, imagine a prediction market for, say, rainfall. Like imagine what that can do when suddenly that's harnessed in a way where those boundaries are available and verifiable and can be participated in by anyone. Look at, for example, the difference between, say, Code Arena and the Web3 world, where people are participating in bounties where they get huge guaranteed payouts, and like bounties in the Web2 world, where if you submit a security bounty, like you might be lucky to get paid a few $1,000s, and the company can just arbitrarily deny it through any decision of their own. And they saw where like the decentralization had massive benefits. I think that composability is particularly hard to communicate because most people have no idea how much maintenance goes into software products in
Yeah.
general. Pretty much every line of code in a code base needs to be touched for maintenance, probably every like 6 months or so. If you're in, say, the JavaScript ecosystem or on top of emerging tech, you might not even be able to leave it alone for like 1 to 2 months. If you're in a more stable ecosystem, maybe it's a year to 2 years. But maintenance is just a massive, massive area. And like integrating with different APIs that are constantly changing is just a massive headache. But to help people understand, like, okay, you have this foundation constantly shifting under you. It's never solid. It's never finalized. In the Web 2 world, You need to constantly be keeping an eye on it. In the Web3 world, you launch a building block. That building block is available for everyone to use forever. Like Adventure Gold, which I launched the Loot ecosystem as an in-game currency for any project building on top of Loot. And that's available for the whole ecosystem forever.
I haven't thought about it. That's awesome. Well, okay, what would you say is your least favorite thing in the space? Or like pet peeve? You don't have to get super negative, but it's like, if you could change one thing, no questions asked, what do you think it would be?
There's strong incentives in the crypto space to make misleading claims. And a lot of groups do so because, especially in bull markets when things are so speculative, the marketing claims just don't get checked. People can make...
Explain it. Like, give an example for someone like...
Ooh, I'll get the pitchforks out if I give an example.
Do it. You don't have to name names. Okay. Just like give like a general... People will know anyway.
This applies to literally like multiple projects in the space. Like, let's take algorithmic stablecoins as an example.
Mm-hmm.
Like, they're an area that is notoriously risky, where most iterations of algorithmic stablecoins have failed in the past. Like, most of them have collapsed, and most of them have collapsed in similar ways. Of course, algorithmic stablecoins are the holy grail of decentralization. And if they are figured out in a sustainable way, they're going to be incredibly transformative. But how many users are, if they're putting money into algorithmic stablecoins, aware of the risks versus the yields? So with all the algorithmic stablecoin yields, people are like, oh, like you can get 20% yields. And I'm thinking to myself, I'm assuming that those yields are efficiently priced. I'm assuming that if it's 20% yields, the risk is compensated for that 20% yield. So if you look at the stock market, where like you expect 10% returns before adjusting for inflation each year, and you look at yields on cash, and you expect 20% returns each year before adjusting for inflation, it's probably twice as risky, if not higher. And, I think a lot of these products were pitched as savings accounts and like better yields than banks. And if every person putting their money into an algorithmic stablecoin knows this is backed by effectively the equity of the algorithmic stablecoin, if the equity drops, then that places my dollars at risk. And if the equity drops so much that it's worth zero, my dollars are worth zero. If everyone understood that, they could use it in ways that are appropriate. For example, using algorithmic stablecoins for settling payments makes sense. You hold it for a few minutes. Like, let's say you want to make a payment from one place to another. You convert the algorithmic stablecoin, you hold it for a few minutes as it transfers, and then it gets automatically converted back to whatever currency you want on the other side. That makes a ton of sense. You get a fully decentralized neutral layer, and you take on the risk while holding it for 5 minutes. That's not terribly risky. That's a good use case for an algorithmic stablecoin. But if you're using it not as payment rails, but as a savings account, you're taking on the risk of the failure at any point that you hold it. And if this product is pitched as a savings account and marketed that way, whether it's by the groups themselves or by people who are trying to like shill the token and making misleading claims, whether it's like first party misleading or like third party misleading, doesn't really matter. If people are putting their money into this thinking that it's a savings account when it's backed by equity, where if that equity goes down, the entire system can collapse in a death spiral. Like, that's something where the incentives to make misleading claims around it are very strong. And in a bull market, most people don't do that much due diligence. It's a transparency issue, right? Like, we talk a lot about transparency in crypto, and transparency is one of the benefits. And it's true, you can check the chain for anything you want. Like, DeFi lending protocols have held up much better in this bear market than the CeFi lending protocols because of that transparency, and they have a lot more trust. But it doesn't matter if the information is out there if you create so much dust that no one can see through to the truth. So if we have transparent blockchains, but non-transparent marketing, we've still failed at our mission.
Yep.
Yeah.
Okay. Makes sense. So kind of switching gears, what's on the docket for the rest of this year for Syndicate and for like the next years? I know you said there's a lot coming down the pipeline.
Yeah.
And you have like your 2-year roadmap it's going to stay the same. Like, what can you share and what can people be excited about?
Yeah. So one thing we're really excited about is our developer platform. I think everyone who's listening to this, who's thinking about DAOs, would benefit a lot from it. And it's something where anyone can build on top of our architecture, and our architecture is a modular architecture. So that means that if you want to customize Syndicate in any way you wish, you can just swap one tiny component. So you can write like 10 lines of code and have completely new mint logic. You can write like a few lines of code and have completely new transfer logic. And that's something that's really exciting to us. So like every single DAO launched on Syndicate is not just an investment club, like it is at the application layer, but also under the hood is an entire composable modular DAO infrastructure. So like we want to be with DAOs as they scale. We want to help them through every step of the process, and letting them more deeply customize their DAO is something that's really important to us. So that's coming soon. And then we're also thinking a lot about ways to build community on Syndicate. We've done some trials in private beta of our membership NFT product. There's like over 60,000 of those in the wild. Groups like Rug Radio, NFT collector community, BFF, a women investor community. They're set up on our membership NFT product. And that's really great for building community and using it as a token gating primitive, all sorts of things. That's been in the works for many months. And it's something I'm really excited about because it goes beyond just minting an NFT. It's community infrastructure at its core. So those are two things that we're thinking a lot about.
A lot of stuff coming down the line.
And Polygon soon to reduce gas fees.
Awesome.
And eventually L2s. Everyone's been asking for that. So that'll happen as well.
Soon. Yeah. Awesome. Yeah. Okay, one last question, and it's unrelated to crypto. What is your favorite place in the world and why?
I mean, I definitely do like to get away for hiking or biking. When I'm hiking or biking, I'll often just not bring my hardware wallet. And then something big always happens when I do that. One time I was hiking in Oregon and then loot dropped and I didn't have my wallet on me. The next time I was at a campground in Austin for DAO Camp hosted by Creator Cabins and Groundwork. I didn't have my hardware wallet on me. Terra and Luna collapsed. I didn't have any money in it, but next time I'm traveling, you should probably short the crypto markets. It just always happens.
Tweet that out. Make sure you tweet that out.
Yeah. So, not financial advice. Please don't use my travel schedule to try to figure out the price movements of crypto because it's
happens.
Every time I'm like, oh, I won't need this. It'll be a calm week. Something big always happens. Yeah.
So you didn't tell me a place. Where?
Oh, yeah. So probably one of my favorite spots to hike is in the national parks in Maine. Acadia National Park and Mount Katahdin are just some of the best hikes and views you'll ever see. They're really, really stunning.
Is that part of the AT?
Mount Katahdin is the end of the AT.
Okay.
So you can hike Mount Katahdin, and while you're hiking it, you see a bunch of people who are finishing the AT
awesome.
and
super
hyped up. So you get some enthusiasm from them.
That's cool.
You haven't I didn't take the many 1,000-mile trek through the AT, but you can see people
super pumped about it.
Moment.
That's cool.
Yeah.
Cool. Well, thanks for joining. And if people want to get involved with Syndicate, want to join Syndicate, where's the best place to do that? Is it the website? Is it Twitter? Is it Discord?
Yeah, so they can find us on Twitter at Syndicate DAO. That's where we post most of our updates. And then if they want to, they can join the Discord. That's a fantastic community. There's tons of people helping each other out, getting set up with investment DAOs, answering questions for each other. It's a really great place. It's also where we pay really close attention to user feedback and help incorporate those changes into our protocol and our product. And then they can always email me at will@syndicate.io and I can connect them with the right team members. I'm also on Twitter at Will Papper, paper with an extra P, P-A-P-P-E-R.
Awesome. Well, thanks for coming on DAO Talk.
Absolutely. Thanks so much.